Welcome to Bears in Exile. Today is November 16th, and it is time for the market overview, looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Well. We finally get something decent. And sure, it was looking grim for the Bears the most of the day, I have to say. I mean, right up to the very end. But it was able to be pulled out thanks to some news, I think mistakenly released prior to the close. Because news like that, every single time for the past month, has always been released moments after the market closes, conveniently. So I think a slip up, but hey, it's a slip up I'll take. Now, we have been watching the euro closely. It did drop into the 1.35s again, and then broke into the 1.34s, and not just the middle 134s, into the low 134s, actually threatening a 1.33 either tonight or tomorrow, possibly. So fantastic. And we're going to talk about that more here in a few minutes. But starting off here with the Dow, 190 points to the downside. And I'm going to blow this up because this was amazing how you see right at the end of the day, boom, all fell apart. And very unusual. Not typical whatsoever in the grand scheme of things lately. So it is what it is. Now, for the analysis, take a peek. We said last night we had the declining highs and the ascending lows. The bears are not out of the woods. I've just got to be absolutely clear that they are not out of the woods. I mean, this could be another bottom, and then which this little ragged line that we'd have here is still pointing up. We have to break that, and I do think that we have an outstanding chance that we will. Short-term moving averages all turning down. Another nice down day, and we will have the bearish middle Bollinger Band above the short-term moving averages once again. We have to break this sideways action, and it is going to break one way or the other. It's going to break. We're running out of space, and so nice big red bar. We closed below the 200-day moving average once again. This has been extremely I don't know if infuriating is the right word, but it's been pretty ridiculous, this fight over 200. And if we close above it tomorrow, just absolute ridiculousness. And especially if we were to get close above it and then have a lower high once again, it would be maddening. But we shall see what happens. CCI crossing into bearish territory, down tick on the 14-day RSI moving average, down tick on the fast stochastic, uptick on slow stochastic, down tick on the RSI, getting into negative finally, down tick on the MACD, down tick on the histogram. So good, finally. It'd be fantastic to have a bar retest. And we have said multiple times going down to the major price consensus level at 11,400 would be entirely appropriate. And here's to hoping that we'll see that. I don't know if we can see that by the end of the week. It's OPEX, but we're going to see if there is a Euro panic or not. SPX. Ooh, we had our little spinning top yesterday. Nice 20, almost 21 points to the downside. We still have a lot to go before we can really claim victory as bears. And that would involve getting below 12.20. Actually, 12.19 would be better, but especially if we're able to get to the major price consensus level and break it, that will be wonderful. But still holding below the 200-day moving average. We do have the middle Bollinger Band above the short-term moving averages. Short-term moving averages all pointing down. Not much of a bar to stop this if it decides to really slide. Downtick on the CCI, once again getting back to bearish territory. Downtick on the fast stochastic, uptick on the slow stochastic, downtick on the 14-day RSI moving average. You know, when this thing crosses the 80, it should really pick up steam. We don't know yet if the stochastics are going to try and reset and meet up with it prior to the fall. But with any luck, we'll have these fall all the way to the bottom. This will get to the 80 roundabout, and then they will either reset to it or just stay down there. Remember, about a month ago, UUP was doing the exact same thing. We thought we would get a stochastic reset, and instead it got stuck at the bottom, which was highly unusual. Maybe we'll see that again. So downtick on the RSI getting to negative, downtick on the histogram, downtick on the MACD. Moving on to the VIX, we have a hammer. Why would we have a hammer right here? Well, we do, so I guess that's all there is to it. You can see the middle Bollinger Band line still below the short-term moving averages. We've been saying all this time that it should help give lift, and we got some lift today. We still have a lot to go before we break some previous peaks and really get the juices flowing. So uptick on the CCI, uptick on the fast stochastic, uptick on the 14-day RSI moving average, getting right to the 20. Downtick on the slow stochastic, uptick on the RSI, uptick on the histogram, uptick on the MACD. Notice that at this point we have all kinds of room to move in the upside, but really in any direction. So hammer, what's that going to mean tomorrow? I guess we're going to find out. TNA, look at that double flatline, ugly. And let's blow it up and really take a look at the detail. We did close below the upper price consensus level today. Short-term moving averages are slightly pointing down. We still have a little bit of a bearish bar. If we blow this all the smithereens and zoom in on it, we still have to test the major price consensus level. We have this could be a shooting star, it could be an inverse hammer, depending on what you want to call it. But because it is blown up, keep in mind that this is these are small bodies. It is not as powerful as it looks all blown up. Slight downtick on the CCI, downtick on the 14-day RSI moving average, downtick on the fast stochastic, uptick on the slow stochastic, downtick on the RSI getting to negative, downtick on the histogram, very slight, and downtick on the MACD. But encouraging that it did close below the upper price consensus level. Absolutely. UUP. Oh yeah. This one is all kinds of fun. We have a little doji star. Doesn't have a real body really to make it a hammer. If it was a hammer, maybe that would be a reason to pause. But nonetheless, it does not have a real body. We said yesterday with the spinning top that the markets did not make sense with the amount of gap and the position differential. With the markets being up and UUP being up like this. So even though there was some corrective move intraday to try and reset that to the bullish side, it didn't work out. And we ended up closing up close to the highs, but not at the high. Being above the major price consensus level for this month and the previous month is bullish, and you can see from the short-term moving averages pointing up, getting away from the bar, and the middle Bollinger Band being below the short-term moving averages. This is a good sign. Absolutely. CCI is getting high. Slow stochastic is still high. Fast stochastic getting back up there. 14-day RSI moving average having essentially the entire range to move to the upside. It'll be very interesting to see if we get a stochastic reset prior to the march of the 14-day RSI moving average, or if it's going to get stuck. And we had mentioned that in the previous month of October, we had the march down of the 14-day RSI moving average, knowing that it would be bearish for the dollar, which it was in a very large way. And we were expecting a reset of the stochastics. It did not happen. The fast did try, the slow did not. So we need to see what happens here and not count on a stochastic reset, because as we can see, it doesn't necessarily have to happen, even though it is typical. And FXE. Oh yeah, Gravestone Doji. Or you could call it an inverse hammer. Is this going to be enough to halt the move down? We are below the lower price consensus level for this month and the previous month. Short-term moving average is pointing down. Yes, there is a tad bit of excessive separation, not major yet. Middle Bollinger Band above the short-term moving averages. Of course, we are well below the 200-day moving average. Downtick on the CCI getting to oversold. Downtick on the fast stochastic and the slow stochastic getting to oversold. 14-day RSI moving average just beginning its march. We do not know if we're going to have a reset of the stochastics prior to this completing its march. So, perfect inverse of UUP. We saw it rising last month. We were expecting a reset of the stochastics. It did not happen. So we don't know what will happen this time. Downtick on the RSI getting to oversold. Downtick on the histogram. Downtick on the MACD. Not looking good for the euro. At least they have a Gravestone Doji maybe to do something with tomorrow. But very encouraging. Very encouraging. Now, the wish list doesn't look like so much of a wish. But we shall see. And moving right along to GLD, our second VIX. Interesting. We got a downtick today, and it was resolved intraday. We have the middle Bollinger Band still in the short-term moving averages, kind of making a little bit of a mess. 14-day RSI moving average is leveling out. That is pretty interesting because as uncertainty increases, we should not see the price of gold crap out. We should see a flight to gold. Perhaps there is not enough uncertainty to warrant that, but I do think that will change. Downtick on the CCI, uptick on the slow stochastic, downtick on the fast stochastic, downtick on the RSI, downtick on the histogram, downtick on the MACD, not yet getting a bearish cross. The only other explanation I would have for this thing going down, besides the value of the dollar going up, is if people are selling gold because they're going to be taking some hits on everything else. We saw Rambus get hit by 60% at the tail end of today, which was a crushing blow. I'm going to be watching that one pretty close because that could be way too much of a move to the downside. Actually, I should add that on here. Maybe I'll make another video tonight with just on that symbol. SLV, a little miniaturized spinning top. Not a good thing. We wanted this to stay inside of the bar or above. We do have the 14-day RSI moving average now starting to hook over. Downtick on the CCI, downtick on the fast stochastic, downtick on the slow stochastic, downtick on the RSI, downtick on the histogram, slight downtick on the MACD, possibly going for a bearish cross. So if precious metals are about to take a hit, which it looks like it is entirely possible that they may, which could be the liquidation of metals to cover equities, I think a good dip on it will be a buying opportunity. But we're going to have to see what develops. It at the moment does not look good for silver in particular. You can see the middle Bollinger Band getting above the short-term moving averages. This is not a good sign. You know, perhaps it's just going to be a retest of the upper price consensus level, at which time buyers will come in. Maybe even so far as to the major price consensus level. But the upper seems to line up really well with this previous peak. If we do get a corrective move to the downside, it will be very important to see if that holds or not. But as always, the situation is fluid, and we're awaiting more news out of Euroland, or maybe as it should be called, Circus Land. So, as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.